Big chair.
Awesome.
It's massive.
Good afternoon, everybody. Excited to talk about the future of FinTech. I am Ben Mills. I'm the co-founder of Mezzo. Mezzo is infrastructure to make it really easy to move money between blockchains and bank accounts. And today I'm joined by an awesome panel that I will let introduce themselves. Guerra, do you want to start?
Yeah, hi. So I'm Guerra Kiwana, the head of crypto, also another title, the founder and resident of crypto at a traditional payments company called Onafrique. We recently rebranded, so those who may know the African payments ecosystem, our name was previously MFS Africa. So yeah, that's a bit about me. Go ahead.
Hey, I'm George Stella. I'm the founder of Big Token. I come from the advertising side of the world, so I've been in advertising for over 30 years. I'm probably the senior member of the crew up here. Was in TV advertising way back in the day, and then cable advertising, and then in 1998 moved over to the internet advertising side, and was with the first for 12 years, first company that developed ad serving technology for web publishers. We created behavioral targeting and cookie targeting in the first demand-side platform, so you're welcome on the cookie targeting stuff. And now, launched Big Token and embracing Web3 for ad tech.
Yeah, and my name's Ian. I'm the co-founder CEO of TipLink. My background comes from kind of traditional finance. Worked at Goldman Sachs for a couple of years as a program trader. Was at Citadel as a quant trader, quant portfolio manager. Was there for 6 years. Quit about a year and a half ago to start TipLink. And hopefully some of you have gotten some of the activations of TipLink here. But the idea is pretty simple. You can send crypto or NFTs to anyone with a link. If they have a wallet, they can withdraw it there. If they don't have a wallet, they can just log in with Google, and that becomes their crypto wallet. And super excited to be talking some FinTech today.
Awesome.
I'll just quickly introduce what we do. So MFS Africa, also now known as Onafrique, is Africa's largest payments hub. So we are present in 40 countries and do everything from moving money in, out of Africa, as well as around Africa, specializing in mobile money, so interoperability of mobile money networks. So traditionally, we've done a great job of building the foundation of payments in Africa, but now we're looking at integrating and using stablecoins, specifically in crypto, to go to the next level. My background has been in building banks and FinTech and general payments.
Great. Well, to start, we thought it might make sense to really understand where we're kind of at today in FinTech. So I'd love to hear from each of you about, as you see it, what are the big kind of unsolved problems in FinTech today? And then we'll kind of dig into how crypto might be a solution. Guerra, do you want to start?
Yeah. So that's a big question. What are the big problems in FinTech? What's causing us headaches? So I'm going to speak from the African perspective. So Africa, fastest growing continent, youngest population, highest adoption of technology in general, but highly fragmented ecosystem. Like I said, 54 countries, minimum of 54 different regulators to deal with, and the companies like us have done a great job of getting licenses and actually putting a patchwork of a network together to work in these spaces. So I'd say the biggest problem in Africa, at least right now, is the hyper fragmentation. It's, you go from border to border. Kenya to Uganda is like wildly, vastly different. But there's a lot of excitement and interest in trade between these two corridors, and digital payments has done a great job to get us to a point where there's financial inclusion. And Africa in general, we're seeing a lot of financial inclusion, but we really need to get to that next level of solving for hyper-fragmentation and really, accessibility to like modern payment systems to get to financial freedom. So we're included now, all the papers that are being written by the UN, whoever, they talk about Africans being not included. We're included. There's a lot of penetration of financial services across the continent. Now what do we do with it is the biggest challenge that we're seeing.
Awesome. Great. George?
From speaking from the data monetization side, the advertising side, I think one of the big challenges is the opportunities that can be embraced around all of this really deep data that FinTech companies have on their users and their customers, and how big of an opportunity that is for these companies to actually be able to monetize that data. But because the data is so sensitive, it really it poses a lot of risk. There's minefields of liability issues out there that need to be figured out, I think, Web3 wallets and smart contracts and things like that can be a huge way to solve those problems.
Absolutely. Awesome.
Yeah. So for me, the best way to kind of illustrate the pain points in fintech is kind of the origin story of why we started TipLink. And it had nothing to do with crypto at all. So my co-founder, Sheik, and I, we had built a bunch of stuff outside of work for fun. We built this thing that would predict what content on the internet would go viral. And we popped it into an Instagram account and later a TikTok account. And we were growing this account, and we did a simple giveaway. The goal was hey, let's just give $10 to someone who wins. I messaged this lady hey, you won $10 to use PayPal. And it took her literally 2 days to respond. She says, no, I use Venmo. I was like, cool, what's your Venmo? It took her another 2 days to respond. She was like, I'm not telling you my Venmo. And I was like, I want to give you $10. Why is this so hard? And that was the first time we were like, man, it'd be nice to just send money with a link. In the same way, when I hand you cash, I don't ask you what platform you use. I don't ask you what your username is. I just hand you this thing. So a little bit later, we built another project. It was like Reddit, but if you make it to the front page, you get paid real money. And accepting money on the internet with Stripe and PayPal is super easy, but paying out money to users across the globe, when everyone uses different platforms, when everyone has user names across these platforms, really, really difficult. So again, we're like, man, it'd be really nice to just send money with a link over maybe email to all of these people. And we couldn't figure out a way to build this in traditional finance. And really, crypto was the only way that we could figure out how to even make this product. But that was a major pain point. That's just a fintech problem itself.
Yeah, I mean, I think what strikes me is this similar theme I'm hearing across all you is it's the complexity of all these disjointed systems. And if in many ways I feel it's only getting worse. I think that as more and more regulation happens, which is whether that's good or bad, it doesn't really matter. It's just complexity that you have to deal with. Yeah, I think that's very interesting. Well, let's jump into crypto. I mean, I find almost everyone I talk to at conferences like this has a pretty interesting story of how did they even get here and what brought them into crypto. So I'd love to hear from each of you. Maybe George, do you want to start? What got you into crypto? What was your story?
Yeah, sure. So going along the path of ad tech and consumer data, at Big Token, we started to really understand that consumers had an appetite to start controlling and having more transparency and actually getting some value back for their data. So we launched Big Token originally as a way of what we call the world's first data union. So a place where consumers can come and contribute data and earn value back for it. It had a supply side and a demand side. And the consumers were earning points, and the points were redeemed for cash. And it acted very much like a currency. Mm-hmm. And so this was in 2018 as crypto was kind of starting to explode. And so it just kind of made sense that we were attracted to that area. Also, BIG stands for Blockchain Identification Graph. So the original vision was always to move the very much Web 2 mobile app that we developed into a Web 3 space, which we've just done. So that's really how I got into it.
Cool. Where?
I was gifted Bitcoin in 20, and I'm not going to say the year.
Did you buy pizza with it?
You know what? I did a stupider thing. Well, not stupider. I essentially got gifted Bitcoin for an unpaid internship I had, and this guy was like, "Do you want this thing? I feel bad that I'm not paying you." And I was like, "Sure, yeah." And he's like, and I think I could only buy drugs and guns at that time. And I kind of forgot about it, line went up, and I cashed out. And I used that to actually found my first business, which was a cross-border payments company between Canada and Kenya, Uganda. If I'd held on to it, that's another story. But you know what? The lessons I learned along the way were priceless.
That's right.
And yeah, so kind of degenning in a very under the surface fashion. DeFi summer was a lot of fun. We were all at home, during the pandemic. But you know what? I don't have the heart for the line going up and down and chasing that. And now I don't have the time either. So after the crash and actually before that, I was also working at a FinTech consultancy, and this is where we were building banks and doing a lot of stuff with payment services, regulators. And there was a time when a lot of our clients, who are traditional payments companies you might even know of, large payments companies coming to us and saying, hey, can you support us with our crypto strategy? And my boss at the time gathered all the degens, and he was like, I know you guys know this stuff. Let's figure out how to support our clients. And on the other side as well, so crypto natives coming to us as well. So that was where I got a taste for institutional crypto, and especially the crypto mullet thesis, which is fintech in the front, crypto powering the back, and getting to work with crypto natives, crypto non-natives, regulators, to help them understand this new technology. And that's been my work trajectory, but also life-wise. I split my time between Kenya and the UK. East Africa has horrible financial services. Sending money home is really difficult. It's very expensive. And also our currencies are devaluing at a ridiculous rate right now. So I've turned to stablecoins for my family and my friends. I've encouraged them. I feel like I'm trying not to be like the Ruja, whatever her name was, the crypto queen, to get people into stablecoins. But I've found a lot of utility in that in my personal life. So that's been my journey. It's kind of been it was really fun and exciting and so lucrative and then scary and terrifying. And now it's okay, we're in a sustainable place. Yeah.
Awesome.
Yeah.
Ian?
So for me, the first time I actually heard about Bitcoin was in 2010, and I was a freshman in college, and this guy who was this libertarian came up to me and said, the whole world is about to implode, every currency is going to be worth nothing, and we're going to all be using this thing called Bitcoin. And at the time, I was just okay, it's a cool story, sort of thing. And it's funny because a little bit later, this is in 2014 as well, I met this really bizarre dude who was working on something called Ethereum. And he asked me what I was doing, and I eventually told him I was going to be working in finance at a place like Goldman. And he started listing off dictators that were similar to Goldman. And I was like, what is going on? So I wanted nothing to do with that. And there was something very interesting in the inside of these very fringe people kind of brought this up. And it's don't take investing advice from the person who tells you the moon's made of cheese or something. But there's something interesting about those fringe groups that are there. I ended up just really liking trading. So in college, for a very brief period of time, I was one of the biggest market makers on a betting site called Intrade, where you can bet on the election. And that site ended up getting shut down. So this is in 2013. I was looking for something else that was fun to trade that wasn't the stock market. And Bitcoin was there. And so back then, I ran with a buddy 24/7 Bitcoin trading strategies. I'd stay up all night. I'd have web scrapers call my phone when certain Chinese news events were happening. They'd web scrape every Weibo account. And I got really into Bitcoin then. And through that process, I actually started enjoying crypto. And then, at Goldman and Citadel, I ended up being the resident crypto nerd. I unsuccessfully convinced them to get into the businesses. But yeah, about a year and a half ago when I told my boss, hey, I'm going to quit, I could see the anger that was kind of building up. And then I was like, wait, I'm about to do a crypto startup. And he's just all right, that makes sense, yeah. Just been in the space for forever. And yeah, it's been a fun ride actually being in this full time.
Awesome. Well, let's talk now about how can crypto help fintech and how ultimately can that help users. So I'd love to hear from each of you about how do you see crypto as a solution for a lot of these big problems that we talked about earlier? Guerra, do you want to start?
Yeah, crypto is interesting in that it's the first time the global south and the global north received a technology, except for maybe fire, at the same time, right? It's the first time we've received an innovation at the same time. We're all innovating and building with it and on it at the same time. And we're seeing a divergence, right? In the global north, there's a lot of retail use is just mostly, line go up. And institutional use is similar, but mostly treasury, boring stuff, settlement. But in the global south, we're seeing use cases for a need for stablecoins and to solve for currency devaluation, also for cross-border payments or remittances. So crypto it's great. I believe in crypto in general, cryptocurrencies, digital assets in general, because they're connecting a region that was previously left behind due to various reasons. Colonialism is a big reason, but we've received it at the same time as the rest of the world, and we're not seeing the same kinds of. It's more collaborative. So there's more collaboration between the global north and global south, rather than exploitation. So previously, it was quite exploitative, the relationship. And with payments in general, we're seeing a lot of collaboration north and south, right? So remittances is a big one. stablecoins entering the continent to solve for just digital money, right? Just giving people access to digital money in places where there's a huge need for US dollars. Dollar liquidity is incredibly low, incredibly hard to find. But stablecoins, not so much. So what does it solve for? I mean, it solves for kind of equalizing the playing field globally, in my opinion. And I think we're still like 0.1% of the way there. Like, there's still so much left to do and see, but yeah.
Awesome. And do you, when you think about, this is the technology that came, everyone got access to right at the same time. I think it's a really interesting take. Why do you think that pre-crypto or kind of traditional fintech hasn't had that as easy of a time addressing these problems?
So I'd say the one word, hyperfragmentation. I guess it's two words. Africa, and I'm speaking for the African context, right? Like I said, 54 countries. It's a massive region, and we try to separate it out with there's Francophone West Africa, South and East Africa, MENA, Middle East and North Africa. But even in those blobs, there's still so much fragmentation, and no one really is solving for it in an equitable way. It's mostly the banks who've figured it out. And who are the banks there to serve? Not retail users. They're there to serve businesses. They're there to serve retail users to get deposits, but nothing beyond that. So, for example, I'm a big believer in fair debt, right? Debt is what is needed to grow businesses, grow our economies. And African debt markets are priced incredibly high because of the risk that it poses, or the perceived risk. Someone sitting in Canary Wharf, London, is setting the rates for lending to a borrower in Africa. But we're seeing a lot of fintechs cropping up who are able to price that risk themselves. But when they try to find debt from institutions, they're getting these crappy, horrible, 20% AP, annual rates, ridiculous rates. Banks in Africa are getting those rates, but we're seeing real-world asset protocols doing a better job of offering debt to these lenders in Africa, right? So that's one example I think is really interesting, and especially when it comes to lending, right? So the fintechs have figured out how to lend, they've figured out how to price the risk. Now they need to figure out where to source that debt to give it to their borrowers at a decent rate, better than the banks. On the other side, the protocols are offering African debt markets, which are so lucrative and so attractive to certain kinds of investors, to everyone now, right? So there's some, Huma Finance. There's a few of these out there. Goldfinch is famous for their work in Africa, but it's kind of, again, leveling the playing field a little bit more. Yeah.
Absolutely. Awesome. George.
Yeah, from my perspective, it's less about crypto and more about the underlying infrastructure, blockchain, technology, and wallets. It's really about two things: privacy controls and decentralization. Because in the space that I come from, for decades, advertisers, brands were on one side, still are, consumers, customers on the other side, and in the middle is this massive mess of centralization. Walmart and Amazon, the big retailers, hold all the consumer data. Ticketmaster has, controls all the data for teams and leagues and artists and concerts. Hotels.com, Travelocity sit as an intermediary between, travel companies and their customers. And for decades, they just sat and controlled, and still do, control all of the consumer data and all of the relationships between a brand, a company, a marketer, and their customers. And so when I started to uncover the sort of the capabilities and the powers behind blockchain decentralization and its privacy controls, I was blown away, and I knew I just had to get in there and figure something out for the ad tech space, because now, Big Token and other companies are empowering these brands and these marketers and advertisers to go directly to their customers, create direct relationships outside of that whole centralized ecosystem, and do so without having to, and this is the privacy piece, without having to collect and store personally identifiable information, or PII, right? Now the brand and or the advertiser can eliminate massive liability costs and complexities around data privacy regulations, and only need know what a wallet does, what a wallet likes, doesn't need to know anything about the actual person itself. Create targeting and tracking abilities to against somebody's wallet, and it's a huge breakthrough from my perspective in my industry.
Yeah, no, I've spent a little bit of time toying around with some ad tech ideas myself, and it's a fascinating space. It is, I do think, the perception of a lot of people is negative. It's oh, ad tech, I don't want to turn into big Web 2 again. What would you say to that? What's your pitch on there? Hey, there's some really interesting stuff to do in ad tech that's actually good for users.
Yeah, I mean, first of all, I like to say I'm a recovering ad tech executive, born again privacy tech. Consumers, people do make sort of an unwritten contract or agreement with companies that provide digital products, right? I mean, you are getting a lot of goods and services and content for free as a human, as a person, right? And the sort of unwritten, understanding is that you're going to look at ads. So, I think people could tend to get a little carried away with how, how hardcore people are about their data privacy. But that being said, I think ad tech has gone way too far. There's a lot of stuff, a lot of data collection happening in the background. These platforms are listening to us. They're in our bedrooms now, identifying words that we're saying and then targeting ads. So I think they've gone too far. And so, there is this opportunity now to kind of course correct on that. And I think blockchain and crypto is definitely going to help do that.
I have a follow-up for you. What's the learning curve you have to go on with these traditional organizations when it comes to with Big Token working with you?
There's been a learning curve. It's not necessarily so today. The curve is much less than it was when we first launched Big Token in 2018. When we first launched Big Token in 2018, and then 2019. I was evangelizing this thing to brands, and some people understood what I was talking about when I was saying things like, California Consumer Privacy Act is coming. You got to prepare and make sure you have your ducks in a row for when you have to start complying to these data privacy regulations. GDPR is in effect now in Europe. This is how it's affecting them. And like everything else, it takes a long time to get people to change their behavior. And so there was a lot of evangelizing, and some would listen, but it took us, I'd say, over a year to get people really to come to the table. A good example is we would go into these meetings and get all the heads nodding, yeah, we really need to be, preparing for this. And then the follow-ups would take weeks and months, and nobody would really move until CCPA hit the books. And then, oh my God, what do we do? And so Big Token was there with this, data union of all this privacy compliant data. We started seeing, and luckily that was our first year out launching. So we kind of hit it pretty good, and we saw a lot of traction because of that. Cut to today, almost everybody knows what I'm talking about when I come in and come into these rooms and have this discussion. So the learning curve is a lot shorter. Although there are still a lot of big traditional sort of Fortune 500 companies that are slow to move, and they're just tied to their tactics that quite honestly work.
Sure.
But I think we'll get less and less effective over time.
Absolutely. All right. Ian.
Yes. So for me, thinking about kind of fintech and crypto, it's interesting you hear from people like, hey, like in fintech and Venmo, it's very easy. I use my credit card, it's easy. In crypto, it's all complicated. I kind of reject the notion that crypto is actually more complicated. It's just that we haven't done the legwork to make it less complicated yet. If you look at like a credit card transaction, you'd have like a heart attack if you looked at the flow diagram of like what actually happens behind the scenes. You'd see all sorts of companies with acronyms you've never heard of that are involved in the transaction. When you do something on chain and you basically send something on Solana, it goes from one place, one wallet, to another place. So it's really just a matter of time before we simplify it, but I kind of reject the notion that it's actually more complicated. Mm-hmm. So I think that will be an advantage at some point. The other thing is like the flip side, like what do I think is going to kind of impact the fintech space from crypto? We hear a lot this like concept of like permissionless and composability. And it's kind of these like hand-wavy words, but to give some like practical examples. So like I can send you a tip link with, let's say, Solana on it, right? And you may want to convert that into USDC. You may want to swap it, right? In traditional fintech, if I had to go build a platform to swap these two assets in my platform, that would be the next year's project. In the crypto space, there's companies like Jupiter and Orca where literally in 30 minutes, I can integrate into TipLink, and we have a mechanism now to swap, right? And that's done in 30 minutes, and you can move on to the next problem. Conversely, there's kind of like this like passive composability as well, where I remember when Helium moved over to the Solana network, I sent, as soon as it happened, I sent over a tip link with Helium token over to the founder of the Helium Foundation. And he like tweeted out something like, oh, all these people, like super hard work behind the scenes making all this stuff happen. And I was like, I did nothing. Like, it just worked like as soon as it went over to the Solana network. And so conversely, you also have like, the Euro E people, when they make a Euro E stablecoin, it just works in TipLink. And I remember in our first conversation with the Euro E folks, I was talking to them about like, hey, like TipLink's a good way of kind of distributing out your Euro E. And he was like, oh, like I want to show you this like Figma, like we're already using TipLink like to do this thing. And so he never reached out to us, no one on our team, and just started being able to send his asset via our product. And so that composability, I think at some point will kind of hit a velocity where in the fintech space, like that iteration speed where we can all kind of build on top of each other is going to be really hard to compete with.
Oh yeah, I mean, I think anyone who's spent time building in fintech, or especially if you've done it at a few companies, I think you realize I'm just rebuilding the same stuff over and over again. And like there's so much infrastructure in fintech now for sure, but it's not stacking. Like we're not actually gaining leverage as an industry on it. And I think a lot of it comes down to permissionlessness. Like you're always asking the question, it's like, okay, I can use this platform, but like are they going to compete with me at some point? Am I going to compete with them? But compare that to crypto, where it's like that's not a conversation. It's really magical. Awesome. Let's talk specifically about Solana. Like what I think crypto is like a huge spectrum of different takes and technologies. What specifically about Solana do you all feel helps advance fintech? I mean, Ian, why don't we start with you?
Yeah, sure. So going back to kind of the origin story of TipLink, so we had this problem of like, hey, we want to send people money with a link, right? That's the goal. The thing is, you can't put bank accounts on links. That concept doesn't make sense. But the thing is, wallets are just letters and numbers. So they're actually an easier thing to build on top of than the banking system. And so at the time, the only place we could build this product was really on Ethereum. And so we were basically banging our head against the wall because we're like, OK, I'm going to send you $10 with the link, and it's going to cost like $2 or $3. You're going to click a button to generate a link, and you're going to sit there, and it's going to spin for like 20-something seconds. And so we were like, OK, maybe we can do like this batching thing that's like kind of like an L2, but that's going to probably take us like 6 months to a year to build, and that's not even our product. And it was just like, we kind of came to the conclusion, like, I guess we can't just build this product. And so when Solana came out and we started playing around with it, and we're like, oh my God, this is like a tenth of a penny or close to a hundredth of a penny, and it goes through in 1 second, we're like, finally, we can actually build this product. And so Solana was just like a game changer for us in enabling even the existence of our product.
Awesome. Yeah. George?
Yeah, a couple of things. Number one is the way Big Token works is sometimes we require the ability to mint lots and lots of tokens in a really short period of time. It's like for teams, leagues, artists at a concert. We want to allow consumers to be able to like scan a QR code and mint a wallet like 10, 15, 20,000 consumers at a time in like a 5-minute period. Solana lets us do that. But the other really important thing in ad tech is, for us, we still have to deliver on consumers' opt-out requests and data deletion requests. And that doesn't really jive naturally with pure blockchain as it stands, the immutable ledger where things live out there forever. So with Solana, there's actually a functionality where we can store all the really sensitive data either on the device side or in a central, encrypted area in the wallet itself, and then just represent and govern that data on chain using Solana NFTs, smart contracts, and that actually allowed us to fully deliver on the own and monetize your data
I love it.
philosophy that we have.
Yeah. Actually, just to chime in on that point, like we at one point wanted to have a simple button on our site where you click it and you get an NFT, and you're like, okay, how hard can that be? And then you realize, well, lots of people can do this thing, and it may be like 100,000 people do this thing, and it's like incredibly expensive. Like your company basically goes broke if you put this button on your site, right? And so when technologies also come out, like Solana's pushing like compressed NFTs and these sort of technologies, all of a sudden it's like, okay, they mint 1 million of them and it costs us $50 versus we go broke. Like all of a sudden these new use cases kind of like pop up, and so your example, you need to do 15, 20,000. It's just there really is no other place to do this.
That's true. Agreed.
Yeah, and I mean, Solana is built for FinTech, I think. And in that retail payment, so in Africa, we're seeing a lot more retail use than institutional use. And the throughput capability, the cost as well is a big, so Africa being a super high price-sensitive region, the average wallet size for someone in Europe or America is a lot higher. The average disposable income of an African is probably like $1 or $2 a week. So when it comes to receiving remittances or whatever, like you want to find the thing that's the most cost efficient. And yeah, the fees are huge. Throughput capabilities are massive. And yeah, the ecosystem as well. Like there's a lot of and working in a regulated environment. It hurts me to say no to a lot of degen builders and people who are building really cool stuff as well. And I'm just like, we can't touch you because you just, we're regulated, we're at risk of losing our licenses. So there's a lot of builders on Solana, I find, who are thinking about that from like regulation and thinking about future-proofing payments as well.
Yeah.
So yeah.
Well, that's awesome. Well, there's always a trade-off. So what's the hard parts about building on crypto? Like where do you all see the challenges in hopefully rebuilding FinTech with crypto? George, you want to start?
I think that the crypto space and the blockchain space has historically, respectfully, had a hard time kind of getting out of their own way. There's a lot of companies and cases that are just using the tech for the tech's sake and not really figuring out, like, am I delivering something that is solving somebody's everyday problem, and am I making it really easy for that person? I think crypto, to me, and blockchain is an underlying technology, just like when consumers were adopting email, nobody really cared. To your point, when you look behind the scenes at in a credit card transaction, nobody cares how their credit card works. They just want to swipe it and have it work, right? Nobody cares how email works, right? When email was adopted, they just use it. So I think Web3, and I would argue that in a few years, we won't even use the phrase Web3. It'll just be the background, architecture and underlying infrastructure of everything. But I think the challenge is we got to figure out how to meet the regular consumers, right? Mm-hmm. People, no coiners or non-crypto natives, whatever we call them these days. Where they are, because we're not going to change consumer behavior anytime soon. It takes a long, long time to change the way people do things. So we got to come and meet them, where they are and solve their problems today.
And I mean, I think changing consumer behavior is generally a hard problem, and especially when you involve money, it gets very, very hard.
Yep.
I was so surprised, even in like the 2010s, I would talk to people who would be like, "Ooh, I don't want to put my credit card on my phone." I'm like,
I know. I actually have a little teaser of a case study to kind of bring this example home. But Big Token is all about doing just that, like delivering for regular people. And we're dropping a case study next week on for a staffing agency that is a global staffing agency, and one of their franchises in North Dakota in the United States. They staff beet farms. And there are a group of beet farmers in North Dakota right now that have the world's first beet harvest NFTs. And they don't know that it's an NFT, and they don't know that they have an NFT wallet on their device now. They just know that this staffing agency sent them a $5 Walmart gift card token that they claimed, and now the staffing agency can communicate with these beet farmers. They've never been able to communicate with them on a regular basis before. They can understand them and get feedback from them, and they're now taking the beet farmers and placing them in other jobs, which for the staffing agency typically costs them anywhere from $700 to $1,000 per employee to place them somewhere. And that, to them, that's their whole business model. They make like $1,500 per placement. We're doing it now for like $7. So it's like a 500 return on investment for this staffing agency. And nobody really understands that these are NFTs and wallets and blockchain pushing this around. And it's beet harvesters. They've cracked the
Power of the mullet.
utility code for Web3.
nice, awesome. Ian?
Yeah, so I mean, it's funny, I've been starting to get more involved in like DC as well, and like one of the things that comes up is like, admittedly as an industry, we have to be a little honest that we haven't really seen like a payments product in this space that does not mention crypto, that is just a better alternative. And you have to ask the question like, why is that the case? And like, why is now like different, right? And if you think about like what you need to be able to build a successful payments company, so one, not that long ago, the only thing you can send around was Bitcoin, and it's incredibly volatile, right? And then USDC came around, kind of solved that problem. Not that long ago, the blockchain costs were incredibly expensive, and now, this last couple of years, they're finally cheap and fast enough to pull off these products. Not that long ago, you need to go through a very complicated, seed phrase and understanding of like, what a public key is and all this stuff. But these days, you simply log in with Google and you can do it. And so we're getting really close to a number of these different things. The one kind of last piece that I'm seeing to really make this more effective than traditional payments is really actually what some of the stuff you're working on, which is the on-ramp, off-ramp piece into these different countries. Right now, if you look at some of the big companies in this space, they charge sometimes 3 or 4% to on-ramp into crypto. And so that's fine if you're going to buy some really speculative coin. But if you're going to take $100 and then immediately turn it into 100 USDC and it turns into 97 USDC, that is a non-starter for basically payments use cases, right? And so we're seeing the cost effectiveness happen on the off-ramp side. And it's a bit easier, ironically, because you don't have to worry about fraud risk because crypto settles instantaneously. But we really need those fees to collapse. And then there's going to be this moment in which the fees are cheap enough, and all of a sudden, we don't have to use the word crypto, and we can just say, we can send money around the world faster, cheaper than traditional space.
Yeah, there was a principle that we had at Venmo that I still love, which was like, you shouldn't have to pay money to move your own money. Like, that is like one of our guiding principles at Mezzo, and like, I think we will get there, but I think there's a lot more work on the on and off-ramp side that I think we're hopefully going to make some progress on. But I also think some of that is the like chicken and egg problem of real businesses with real revenue, because ultimately, fiat and like traditional payments is actually very expensive. But consumers never see it. It's getting subsidized. So that means most if not all businesses online are comfortable subsidizing a cost that's way higher than what a Solana transaction is. So to me, if we can get these fees down, I think we are going to hit that inflection point where it's so cheap, it's like, why wouldn't you subsidize it? And then really magic's going to happen. But yeah.
Yeah, the challenge is, you guys have really touched on the overarching theme is like, no one gives a shit about crypto. Let's be honest. Like, no, we want to move to a world where we're not talking about crypto, right? At least I would like to. 10 years ago, 15 years ago, someone was called a digital marketer, but now they're just called a marketer, you know? So I'm trying to make my job obsolete at the company I work at. And we're getting there because my colleagues are now less emotional about the word crypto. Yeah. They're more able to work with crypto companies who, compliantly, without removing the word crypto has really helped us, kind of move in that direction. So the difficulty has been bringing a legacy payments company up to speed. That's been what's difficult for me. Up to the point that we're comfortable with stablecoins. Right now, one of our largest money transfer organizations that we work with, globally, one of the largest ones, we're starting to substitute our pre-funding, which has to happen, from US dollars to USDC. And a year ago, my team would have been like, well, it's just swapping out a currency. What's the difference? With that, we're now able to settle faster, daily, rather than settling T+5 days, which is what it was before. And we're able to bring down the costs for their end users as well, due to the more efficient system. So it's the difficulty as a company that is on the on-off ramp side is figuring out how to work with traditional banks and traditional businesses like ourselves as well, right? I get a lot of crypto companies coming to us and being like, well, why can't you do this? And I'm like, well, where to begin? You're not KYCing your customers, we're not going to talk to you. Yep. And that's been a real struggle. The other struggle that no one really talks about in African crypto is liquidity. So there's one stablecoin that's very liquid, but a lot of it is tied up in illicit finance. And there's other stablecoins that are not as liquid quite yet, but they're still better than the US dollar. And as on-off ramp providers, we need access to dollars as well, because we're not in the utopian world of everyone being on chain yet. But yeah, those are kind of the main barriers I see right now to crypto at scale, using crypto at scale, which is, and when I say crypto at scale, I mean under the hood, no one cares about it. It's just happening. It's, I'm sending money to my mom. I don't need to know that the company that I'm sending it via is using OnAfrique, who's using stablecoins. Yep. I just know that I'm spending 10% less than what I was spending before. Yep. My fees are lower. That's all I need to know, yeah.
So I think we're almost out of time, but one thing that we're now just talking about, and I've heard over and over again across crypto, is this kind of divide between what does the future look like? Is it crypto fully in the background, no one knows what's happening? Is it crypto natives, everyone becomes a degen? I personally, I feel like most major technological shifts usually come with some new kind of common knowledge. The classic example is the URL. The URL is kind of a technical concept, but now everyone gets it. I tend to think there are going to be things like that in crypto. It's not going to be no one knows it has happened and is completely transparent. But I also don't think that people are going to be looking at Etherscan and reading keys and all that stuff. So I'm curious to hear from each of you. What would your best guess be of what is the more technical aspects of crypto that might kind of elevate to become more common knowledge? George, do you want to start?
Yeah, I think it's wallets. I think wallets will create adoption. I remember a time when every company in the world had to develop an app for your device, and all of a sudden you had 1 million apps on your device. I think wallets will act the same way, and I don't think anybody's going to know the difference between an app and a wallet. I think a wallet is going to become the new app. You may not have as many wallets as you do apps right now.
Hopefully.
But I think that is one of the things that's going to create a sort of an onflow into the space.
We're going to have to do rapid fire. I only got a little bit. Yeah.
So I think the thing that people have to be careful in the crypto space is like a lot of people say just abstract away all the crypto and just build for normal people, and that's great. But the question is, what's the timing of when that happens?
Yes.
And as a crypto company, if you're a founder, if you're building this space, you don't have the luxury of eventually being right. You have to be right in a time frame that makes sense. And so you may have to think about, what can I do in the short run that actually services some of the crypto native needs, so that ultimately I can build towards the goal. And the path dependence on how you get there may be the difference between you solving the end goal and getting there and dying as a company.
Great point. Great point.
I'd say I'm in an opposite position to you. I'm in a company that's been there 10 years. We're hoping to be around for 100 more years and beyond. We have the time to actually like try these things out and be a little bit more deliberate. And I would say that like I'll end with thinking about like 100% of the people who were using SMTP when it first came out knew what SMTP was. 100% of people using SMTP right now don't know what SMTP is, but we're all using it, right? So that's email. That's the protocol for email. So crypto is kind of going to go the same way. We're going to not use the word wallet. Maybe someday we'll just use it as like a thing in your phone, or maybe a thing that people use, a widget or whatever. So 100% of people who are using crypto, well, almost 100% of people who are using and building in crypto right now understand crypto and blockchains. But in a couple years, we're hoping that 100% of people using it in their day-to-day lives don't understand it, and that's okay.
Awesome. Well, thank you all. We're running out of time. Have a good rest of your day.